Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Great to be here with you today, folks. Seth Sam Case, and your host, Mark Manila, on this Thursday. Mark, good morning, brother.
Good morning. Great to get together with you all. Glad you're here with us.
Yeah, it's a great time to be together. Hope you'll give us a call, folks. Number is 610-363-1110. You can also catch our live chat, financialissues.org/watch. Just go there, financialissues.org/watch. Fantastic show planned, guys, and a packed one as well. We had a great question from our chat yesterday, gentlemen, touching on a situation that many of us are in, and hopefully those of us who are younger will end up in this spot at some point. It's what to do when you no longer need to focus on intense saving. So here's the question, guys. Douglas from Cedar Springs, Michigan was saying, do you guys have resources on the FISM website to help retirees transition from savers to being good stewards of what God has blessed us with, feeling comfortable to spend after lifelong saving? Boy, what a great question. So, Mark, I think kind of packed into this is, how do we transition from that mindset of tenacious saving, whether it's saving for your motor around your castle or retirement saving, to one where you've made it and you've got a net worth and your house is paid off, and now you're like, well, what do I do? What do I do with all this money?
Now I need to spend it, and maybe I feel a little scared or maybe guilty even, because I've built up this mindset so long of I'm saving.
That can hurt a vacation, can't it?
Yeah. It can.
The whole time you're on the cruise ship, you're like, oh, I shouldn't have done this.
Spending all this money.
No. Yeah, no, it could be bad. You know, there are different syndromes, the depression syndrome, things like that, where people had such a scary time in their life that they developed certain disciplines to try and make it better. Hoarding has come out of the depression syndrome, where people save, every scrap of paper, every piece of tape, those kind of things, so that they don't have to go out and spend the money, so they have enough money for food.
I think we call those coping mechanisms, right?
Yeah, I think that's what they're called. But they become habits and disciplines. Habits is what you discipline yourself till it becomes a habit and you don't think about it anymore. Well, if you've been disciplined all your life to save. When you get to retirement, you feel the same way. It's like, well, I can't just start spin. I still need to be saving. And I would like to say, Doug, that this is a very real issue and for many faithful savers. But you know what? It's not the larger issue, which we're not going to go there, which is people spend more than they save way too often. That's why there's so many people reaching retirement that go, I don't have enough money to retire, or to do what I feel called to do. So I think this is a good thing to address. And I think it's real. That's the bottom issue is it's real. But it's not a bad thing, and I think you have to remember that stewardship embraces saving and spending. It's just, how is it done to the glory of God? So you have to start redeveloping disciplines for a different stage in your life. That's all, just like you had to do many, many times before as your life changed. One of the ways to do that is to start with realizing, what do you need for your daily living? Once you are able to figure all that out, and we've talked about this, you should have a moat around your castle. You should know what your monthly expenses are, not your frivolous expenses. And then you should compare that with the revenue sources that you have. Maybe it's Social Security, pension, other things. And then how much do you need to supplement that? Now, there's been a lot of studies over the years that show, on average, somebody who saved properly for retirement probably has about 30 years left of life. The 4% rule drops into there. That was actually done by many studies, and they all varied a little bit differently. But also, I think it came from what could you earn on bonds over a 30-year period, So that's the revenues you could get. But instead of looking at it from that direction, you need to be looking at the path God has for you. It's called uniqueness planning. It's something I developed in the 90s for my clients and others, advisors that I trained with it. It's that God created you and he has great works for you to walk in, and they're not the same ones that he created for me to walk in. Your path is going to be different. Therefore, your financial plan, your spending plan should be different than mine because God's called you to a different walk. If you're a missionary in some third world nation, you don't need to worry about your personal property taxes on the 3 cars you have in Minnesota because you don't have them. So you have different spending things. Where the rule of thumb say you need to put X amount away for housing, you don't need to do that because you're living in a grass hut. Things are different for you than they are for, say, the president of some football team. It's all different. You have to plan it around who you are. So you start with, the bottom line is you start with the basics. First of all, what do you need to live on? This is your needs, not your wants. What is your housing cost, your transportation cost, your food cost, all the basics, the utilities? You list those all out, not to restrain yourself, but to get a stake in the ground, a clear picture of a sound understanding of who and where you are financially. Once you get that, then you can go and say, now I got X amount of resources. And you say, okay, the pension, the Social Security, this other revenue from the book you wrote, that a little bit of royalties trickling in, that comes down to taking care of X amount of my normal lifestyle. Then you pray, Lord, is this where you want me to be? Is this the lifestyle you're comfortable with me having at this time? If it is, then you go to your investments and you say, what percentage of my investments do I need every year? Do I need my investments to produce to supplement that to keep me going forward? And that's the calculation you need. Now, if you got a $1.57 in investments and you need 900 or 90,000 a year to supplement it, it isn't going to work. So that's not the right plan. God has a different plan for you. But in general, what you want to do is start with where you're at first. It doesn't matter where you're going if you don't know where you're at, because if you start with a plan saying, okay, I'm going to do the 4% solution, you start pouring that 4% into your monthly checking account automatically from your investments, and you find out you're not spending it, then you start saving again.
I'm glad you brought up the 4% because when I was trying to research various strategies of how do people take the emotion out of doing this, that was the thing that came up all the time. 4% rule, 4% rule, 4% rule.
Right. And that doesn't really matter. And you're not going to live 30 years. You're going to live 27, or you're going to live 39, or you're going to live 2. Nobody knows. But the idea is you want to plan for a long life. That's the best plan. Always plan for a longer life than a shorter life. And then if you're wrong, you just leave a larger inheritance to somebody. But you need to figure out where you're at and how much money you need. Then you need to figure out how to get that out of your portfolio. It could be gains. It could be interest. It could be anything. But you set it up to automatically every quarter to be able to send, or every month to be able to send to your checking account from your investment account that amount of money, just like a paycheck coming in. And then you set it up at your brokerage that if the money isn't there, that it automatically sells off certain things, because there will be quarters when the markets are pulling back or things are happening that it can't produce enough of the gains or whatever. So there's nothing wrong with taking gains and making it part of your income. There's nothing wrong with taking income. You just have to sit back and calculate that. And Doug, I really think it's a great idea that we should have a guide on this to help you calculate those things and look at those things. Seth and Sam and I were talking about that this morning, and I think it's something that we should be developing. And as soon as it's out, you'll be the first one to know.
Absolutely. Hey, Mark, let me just throw one tiny little super simple piece of advice for Douglas here. If you're in that situation, Douglas, where you're trying to figure out how do I spend money well after saving for so long, how about you just start by taking your wife out to a nice dinner? and being willing to pay a little bit extra for it. Seriously, like that's Mark, that's such a small thing to do, but that gets you into the mindset of saying, no, okay, you know what? This money is a gift from God, meant to be spent wisely, but meant to be spent in some ways lavishly. And what better person to do it on than your wife, you know, or maybe your children or grandchildren, or if you're not married, maybe a dear friend or your pastor, something like that.
Absolutely. And it should all be done in focusing on what does God have for me? How would God want me to do this? And remember, spending is part of stewardship. It's not whether you should spend or not. It's how do I spend? Is the way I spend honoring God? And if it is, you're in the right lane, and now all you got to do is refine it to fit who you are in Christ and his mission for you and those around you.
My wife and I, we moved into this neighborhood. We had some experience with Crossroads Kids Club. We had served at another club. We kind of thought to ourselves, like, it would be really, really cool for us to actually bring in a club that was able to share the love of Jesus with kids directly into the school. And so we started our Crossroads at Hilltop.
Crossroads is amazing. You can learn all kinds of things about God. That he loves all of us. He died on the cross to pay for our sins. That he will help me in every way.
There is just such tremendous opportunity to reach kids in some of these areas that just aren't being reached.
Sometimes I pray every night. When I feel alone sometimes, God is right there sitting next to me. I can rely on him no matter what happens.
Help reach kids with the hope of the gospel. Visit reachourschools.com. Have you ever wanted to manage your own investments but lack the time to research stocks that are both profitable and biblically responsible? That's where Financial Issues comes in. We're a nonprofit ministry that equips Christians to manage their own portfolios without compromising their values. We handle the details so you can focus on what you do best. This is biblically responsible investing made simple. To start managing your money with confidence and conviction, go to financialissues.org.
Did you know that an unborn baby's heart beats at an average of 120 times every minute? That steady rhythm, that precious sound, that's the sound of life. Preborn partners with local pregnancy clinics across the nation to help mothers choose life, providing free ultrasounds, counseling, and the gospel of Jesus Christ. To give, just dial pound 250 and say the keyword baby. That's pound 250 baby.
Really fascinating conversation. You know, when we're talking about retirement, depending on the stage of retirement that you're in, you might be spending more or less money.
Oh, absolutely.
Can we talk about that, Mark?
Oh, absolutely. I have a brother, my oldest brother. He was the head of paramedics at here in St. Louis, and he worked 24 on, 24 off, 24 on, 24 off, and then I forget how it is, but he, you know, it was like that. And he was saying, you know, like he needs to put as much money as he can in an IRA and defer the taxes to when he retires, and he'll be in a lower tax bracket. I said, why will you be in a lower tax bracket? Won't you have to pull money out to survive on? He says, yeah, but I won't have my income. And I said, so you're going to spend less when you retire? He says, yeah. I said, well, right now, when do you spend more money? When you're 24 on or 24 off? And he said, well, when I'm off work. I said, what happens when you're off work 24/7? Right. And his eyebrows went up. He says, oh my gosh.
No. Mark, I think about that every Saturday. I'll go out and buy a Red Bull or something. And I'm like, yep, I spend more on the weekends.
Absolutely. And the thing is, with our life, there's a longer trend to that. We work hard. We balance our budget because our minds are focused. We do all this kind of stuff. But then we get to retirement and we have 24/7 to do things or to enjoy things, even if it's just, I'm going to drive to Aunt Lucy's today, who's 3 hours away. You wouldn't have done that before. It's the gas. You're going to spend, there's a good chance you're going to spend more doing the things that you always wanted to do when you first retire and you're healthy enough to do them. So you're going to spend more. Then slowly your health starts eroding and you really can't hike the Appalachians anymore comfortably. You really can't do the things you wanted to do. So you slow down and you spend a little less. But then as you get older, you start also having other expenses. After you get past, I'm healthy and I'm retired, do a lot. I'm not so healthy. I'm getting old and retired, so I do less. To, you know what? I got a lot of bills now because of medical, because I got to have my shoulder replaced or my knee replaced. And then next, so there's all sorts of other bills come in. So you have a little difference in time frames of how you spend money. Be prepared to spend money more when you retire for the first 5 to 10 years than you do the rest of your life, is the bottom line on it.
That makes sense. And Mark, you were even talking in the break how with certain safeguards that Medicare has now, that maybe even the idea of spending a whole lot more at the very end of your life for healthcare costs is even not quite accurate. Am I understanding that correctly?
Well, yeah, I think if we look back over time, over the years, Medicare has got to the point where they take care of the majority of the problems you have. You still have co-pays and you still have, hitting those gaps and stuff, but they're limited to how much is going to be out of pocket for almost all your procedures and the things you have to have done. So in a way, Medicare has been very successful at curbing the cost of the later years of growing old. And I think that's a wonderful thing. So instead of a big smiley face graph on how much you're spending when at retirement a whole lot, then comes down slowly, then goes back up way above that, I think that curve is still a smiley graph, but a little bit less on the right-hand side, because you don't have hundreds of thousands of dollars you have to pay for medical costs because you need a heart valve replacement or something. Medicare and other benefits will help with that.
Absolutely. Hey, Mark, what other tips and tricks do you have from your 35 plus years in the business of teaching people to be good spenders, good faithful spenders after they've spent a lifetime of being good savers? Anything else?
Yeah, I think this could be a time of rejoicing more than worrying about it. We don't want to run out of money. We want to be good stewards. We have to plan, right? God calls us to plan, but he also tells us that we are supposed to focus on all the good things of the life he has given you, not to be too frivolous that you can't ever give. The giving needs to continue as well. But what we need to do is be counting our blessings and saying, thank you, Lord. And God has entrusted this with you, the monies that you saved, the monies that you earned. He entrusted this all to you to use to his glory. One of the things he wants you to use it for is to take care of you, yourself, your spouse, whoever God puts in your path. He also gives it to you to celebrate God. Part of celebrating God is waking up in the morning, maybe on a vacation with your family that you haven't been able to take for the last 35 years because you've been so busy working, providing for that family, to wake up in a hotel on the beach with them and to embrace the children that God has given you, the grandchildren. Sometimes it's okay to celebrate God by enjoying life, not to be silly about it. Don't go on a vacation that takes all your retirement money and now you got to live on canned peas and for the rest of your life. But
that's just how the British live every day.
I didn't know that, but I really think it's important. If you can't find the joy in managing that money, maybe you're doing it wrong. If you can't find the joy in staying within the guidelines of where God has you at this moment, then maybe you need to rethink whose plan you're following. Is it God's ears? And the final thing is continuously bathe your plan in prayer, because that plan can change again. God could drop gobs of money in your lap. He also could take it away. And he does that for a reason, to get you on track to where he knows you need to be closest to him at that time. So count it all joy as you experience trials of multiple degrees.
610-363-1110. Great stuff, Mark. Folks, listen, yesterday was a great day to be well diversified. The markets took a somewhat of a hit yesterday. Dow Jones, S&P, and the NASDAQ all down considerably, well over 1%. The Russell was down also. But Mark, one of our consumer staples, I won't say the name, but it's one of my favorites. One of them popped like 20% yesterday.
And that totally surprised me. You know why it surprised me?
Why is that?
Because it's always been a slow, steady climb, historically. Yeah, it pulled back at one point. I think that was as soon as we put it on the buy list. But but it started to climb again right after that. It's been slow, steady because it's a well-run company. It's got financial steel, and it makes a lot of sense. So, yeah, it's fun when those things happen, but it is surprising to me.
For sure. For sure. Yeah. But, Mark, it does happen sometimes. I mean,
it does.
You've got one or two stocks that have a great day, and they can carry you. And isn't that a great lesson of being well diversified, that if you got some that are down, others that are up, and being able to do that disciplined over a long period of time, we believe can lead to great success.
Absolutely. And that's what we're all about here at Financial Issues, is to help people understand there are going to be pullbacks. They happen. There's going to be corrections. There's even going to be crashes. But all these are temporary. All these are temporary. And compared to the growth, the times of growth and the times of run-ups and the times of positive corrections, they're very short. So you have the investing for long term is very important. Being prudent during these pullbacks and during these times is important as well. And right now, the markets are still pretty highly valued, mostly because of the tech, the AI, and the technology end of it, and of course the oil industry, things like that. But it is kind of over the top right now. We got to be very careful. If I were going to invest in anything like, a space company or something, I would do a good valuation on that. And if it showed that it was so overvalued, it's ridiculous, I might step back for a while and let the dust settle. So right now is not the time to be jumping in at anything, but to be finding the bargains, those that haven't ran up in value, those that don't have the same overvaluation, those who still have the financial steel. Those are the areas of diversification that pull us through. Just like you're saying, yesterday we had some stocks that did very well as the markets pulled back to help offset everything. That's why we diversify. That's what it's all about. That's why we talk about it so much. Right now is not a market you rush into. Right now is a market you be very selective in. And if you can't find a selection you're comfortable with, you just go into something like a high yield money market account until you do. There's no rush at this point. That's what I'm saying.
Well said, Mark. Great value in not losing. Hey, Mark, a question we've been wondering this week, again, tomorrow, historic week, SpaceX goes public. We're wondering, the big question, is SpaceX actually clean from a biblically responsible perspective? That's, I think, the most important question for us, Mark, right?
Yeah, and I know what everybody wants to hear. I know everybody's sitting on the edge of their seats wanting to hear. I know what it is. And they're right. I've been talking with my friends at Evaluator Services. They've screened all the documents. They've done all they could, and they've come up with, at this point, it's clean. Awesome. So effectively, that gives us the okay to start analyzing it to say, hey, is this a good buy? That's a whole nother issue. It is not a good buy at this point, and it's very limited stock that's going to be sold. And there's just so many things of this IPO that concern me for the average investor that I'd really love to give some guidance on it. I only have a minute or two here, but I'd like to say that if you have monies that if they go away, it won't affect your lifestyle. It's not food money. It's not shelter money. It's not clothes money. If you have money that do that with, then you just have to get in on this just to be a part of history. I can understand it, but be very careful. You know what the average price to sale is on the S&P 500? I think it's around 2%, okay, for a stock. You know what it is for SpaceX right now? 90.
Holy
we use price to sale because they don't have profits yet. They don't have profits. They're losing billions of dollars a year. SpaceX is. There's some revenues, but they're only funding about half of the expenses right now. So when you look at something like this and you say, they're not even profitable, this company isn't profitable, they're going to raise $95 billion, I think it is. Of that, a lot of the IPO is for the employees and all those people who got stock options and as part of their pay. You got to be very careful. This thing could go up like a rocket and could drop like somebody else's besides Elon Musk rocket very quickly as well. So I'd be very careful. I'd be ultra conservative. Quite frankly, if you can pull yourself away from the hype, I'd wait till the dust settles on this one. But it is exciting. It is a historic moment, and I can explain more about that later. Maybe tomorrow during the blast off of the stock.
As a member of Samaritan Ministries, your monthly share is a gift that goes directly to a real person in need. While that share takes care of the financial
Did you know that an unborn baby's heart beats at an average of 120 times every minute? That steady rhythm, that precious sound, that's the sound of life. Preborn partners with local pregnancy clinics across the nation to help mothers choose life, providing free ultrasounds, counseling, and the gospel of Jesus Christ. When an abortion-minded mother hears that sound, 80% of the time, they choose life. For $28, you can sponsor a life-saving ultrasound and share the hope of the gospel with a mother facing an unplanned pregnancy. Hi, I'm Mark Manella, host of Financial Issues, and today I want to encourage you to give to the amazing work of Preborn. To give, just dial pound 250 and say the keyword baby. That's pound 250 baby.
You're careful about what you bring home when shopping, especially when it comes to feeding your family. Shouldn't your investments work the same way? At Timothy Plan, we offer a wide selection of mutual funds and ETFs that can help you allocate assets without compromising your values. From technology to healthcare, energy to real estate, our funds are not only diverse but uncompromising to your values. Timothy Plan funds are filtered to avoid companies involved in abortion, pornography, human trafficking, and other harmful agendas. What you invest in should reflect what you stand for. Are your investments bearing good fruit? What's in your portfolio? Contact your financial advisor today to find out, or contact Timothy Plan directly at 1-800-TIM-PLAN to discover more. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
Great to be with you, folks. 610-363-1110. Check us out, financialissues.org. Join the live chat. Click that watch button and jump in there. Mark, let's go to the phones, shall we? Into the state of Louisiana and talk to Hamilton.
All right. Well, welcome to the show, Hamilton. Thanks for calling in. What's on your mind?
I have a Roth IRA, and it's with I'm with a brokerage, but I'm thinking about moving it to Fidelity to manage it myself. Mm-hmm. But I was wondering about adding like the small cap or the income value fund mutual funds before I transfer it, so I wouldn't have to pay those the $50 fee.
That's a good idea. Yeah.
Okay.
From my understanding, from all the conversation we had at the beginning of the year with Fidelity and Schwab and the others, and trying to figure out why they're doing all this, and Timothy Plan, I think all of them said, correct me if I'm wrong, Seth, that if you have it in your account when you transfer it in, you can buy more and it will transfer in.
Yep, that's what I've heard, Mark.
So, Hamilton, you're thinking straight. You're thinking a good strategy here. Yeah. And by the way, thank you for investing with biblical integrity. That's a wonderful thing.
My portfolio is done outstanding by going biblically integrity. That's for sure.
Yeah,
amen,
praise God.
That's awesome.
I mean, that's just icing on the cake, isn't it? God commands us in His Word to do so many things, and when we follow Him, it doesn't always go the way we want. But there are so many blessings, financially or otherwise, that happen that we can feel the joy of the Lord. When we walk in His ways, we have more peace in this world, even in the midst of a storm. And I know, Hamilton, you're feeling that too. Thank you so much. God bless you, sir.
Bless you, brother. It's awesome. Mark, why don't we remain in the great state of Louisiana and talk to Nelson, shall we?
Nelson, welcome aboard. What's on your mind?
Hey, surprise, I called again.
Nelson, color me shocked, my friend.
I've been asking the people in the chat to call, but they don't do it. But let me get my question in real quick for you guys.
Okay.
TPFI, Timothy Plans Fixed Income, very interested in that. I need more fixed. I have a 5% position in TPHIX, which has done really well. But since it's a high-yield bond, it could be more volatile than TPFI. TPFI posted a dividend yesterday of 8 cents. If you multiply that across 12 months, it works out to a 3.8% yield. I'm hoping it will go up. So there's two questions. Do you suspect that the dividend could increase? And will it be more consistent? All my other dividend payers, which I have a bunch, the third month of each quarter is the largest amount of income I get. The other 2 months are terrible. So 2 questions about TPFI. Will it be more consistent month to month? And do we think we could get more than 3.8 as the fund continues on in time?
Okay. Well, you know that the Timothy Plan Fixed Income is focused on generating income through investments in government bonds, corporate bonds, mortgage-backed bonds. Now, the corporate and the mortgage-backed have the ability to pay more than the government in general. So that combined with their strategy to emphasize risk management, as all Timothy Plan tries to do, and the BRI, could it be more? Absolutely. It could be a whole lot more, but that all depends on where interest rate goes. Because if governments are in there, if the government bonds have to pay more for you to get more, or the corporates have to pay more. Right now, we're in a growth market. Even the corporate bonds, the yield on corporate bonds and stuff seems to be having a trend downward, not upward at this point. So we got to be very careful with that. One of the things I would say that if interest rates do drop, you'll probably see an appreciation in that fund, because as interest rates drop, the holdings in that fund become more valuable because they're paying higher interest on it. So it could go up or down. That's the bottom line of it. It is an income fund, and that has the same volatility as any single fixed income product, like a corporate bond or a mortgage-backed securities or mortgage-backed bonds. So, yeah, it could go up. I'm really expecting to see between 4 and 5% on an average over the long term with it. But that's just my projections, and I don't try to project the future. It's just that's the way that's what I've seen in bond funds that have similar structure to them, sans the BRI. But I don't think the BRI criteria is going to hurt it at all. I hope that helps, Nelson. I hope that non-answer helps.
No, I understand. I knew that. I looked at the holdings, and some of the corporates are at 5.5%. So, yeah. So the other question is, would it be more likely to be a consistent payout month to month?
I don't know if they're paying out. I don't know that. I'd have to look up whether they're going to be paying out. When you say, you're quarterly, you're getting larger. That's because a lot of stocks, a lot of bonds, a lot of things only pay out quarterly. So they come in at that time. The rest don't really do that, or they might pay semi-annually or annually even. Some pay monthly. So a lot of that is just for how the individual security itself has designed it, whether it pays out monthly, quarterly, annually, semi-annually. So I don't think there'll be any consistency to it. There's probably going to be a band to it about how much it pays out. It's going to be between this and this on a regular basis. And what's that regular basis? I don't know. I'd have to get a hold of Timothy Plan again and say, hey, how does the interest get paid on this, and how often? So they may take it all in and just hold it into the fund and pay it out on a regular basis. I don't know. I
appreciate
for you,
the
Nelson.
attempt to answer the question.
Yeah, I'm just going to have to look it up for you because I don't have that information. And I really don't remember seeing anything about distribution on the fact sheet. So I'm going to have to call. I'll call Timothy Plan, or I'll call the managers and see what they say for you, and we'll get it back on the air probably beginning next week for you.
Great. Thank you, guys. Y'all have a blessed day. I do appreciate FISM, and my portfolio is doing great. So praise God.
Well, praise God,
Nelson.
Praise God. Spread the news.
Yep. It's awesome. 610-363-1110. Hey, Mark, I think we can squeeze John in from Arkansas. All right. Is that correct? AAR. I got to get my state abbreviations right here. John, good morning.
Good morning,
yes, John.
Good morning, it's Arkansas.
Oh, good. Thank you.
We've been listening for years to you guys and our members. I have a question regarding my RMD. I took some money out of my 403B, stuck it in a Fidelity account because Fidelity I can distribute directly to the nonprofit organization. So I pay my tithe that way. Mm-hmm. But my RMD, let's just for numbers, let's say it's $2,000 a year. I've got $15,000 in that Fidelity account. And my tithe every month or every year is about $10,000. So it's way, way, way more than the RMD. And I always have a surplus left, and I just keep using out of it till it gets down, and I transfer some more out of the 403B. Is there a better way to use that surplus that's in Fidelity rather than just let it sit there until it gets down again? Is that a clear question?
Yeah, I'm working through it in my head. So you have a Fidelity IRA is what you're telling me, right?
Right.
And you're moving money from your 403B into that on a regular basis to keep it full so you can distribute it using for your tithing and for your to cover everything. Yeah, okay. And you're using it as a QCD, qualified charitable donation, so it doesn't affect your income, right?
Right.
Okay.
That allows me to use my income. I don't have to pay tithe off my income because I'm using it out of that
Why are you leaving it in your 403B is my question. Oh, we only got a minute here left, so we can't go real deep into that, but aren't you rather limited in your 403B, which you can invest in? Wouldn't it be better just to roll it all over into the IRA and be able to manage it in there, and then you pay it down and it's all in the right place anyway? Just a thought.
It might be. It's with my company. It's the church.
Oh, are you still working?
Company. Yes.
Oh, okay. I get it. Never mind. That makes sense. But they allow you to transfer it, right?
Right. Whenever I need to, every year.
Are you able to invest with biblical integrity within that? We got like 30 seconds left here. I'm sorry. In a second. You know what? We can carry over to the next part of the show.
John. Yeah.
John, can you hold on? I'd like to dig into this a little bit because there are some strategies we probably should talk about. So stay with us as we go to a break here. And then we'll come back and talk about the best way to utilize the 403B and the IRA in this situation for John, and maybe how you too could benefit from it.
My name is Reagan Gardner, and I am in the 4th grade. Last year, I wanted to be like everybody else. I thought I had to act different, look different, and be different to be cool. When I joined Crossroads, I learned that God loves me just the way that I am.
Help reach more kids like Reagan with the hope of the gospel. To learn more about Crossroads Kids Club and how you can get involved, visit reachourschools.com.
As a member of Samaritan Ministries, your monthly share
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. On top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn.
Then they sat me down. If you were to die today, do you think you would go to heaven? And I was like, no. Keeping the child was my first stepping stone, and ever since then, God has cleaned me up from the inside out.
Help support women in need. Go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Hey, you know what?
Yeah, Mark, go ahead.
I just love it when you play guitar on the show like that.
Isn't it great?
Seth.
I know. I mean, look at it. I'm so talented. People, our radio audience is missing out on this, but I can play guitar without a real guitar.
Without even doing it.
It's a pretend guitar. But you can hear it.
Your air guitar sings.
Sometimes I amaze myself, guys. That's all I can say. 610-363-1110. Hey, Mark, before we get back to John, I just want to mention to everyone listening, we have a conference call today, folks. Conference call today, 3 p.m. Eastern time, so 2 p.m. Central, 1 p.m. Mountain, 12 p.m. Pacific time. Make sure that you can be on and attend this conference call. If you can't make it, it'll be posted after the fact, but we love getting to have as many of you on there as possible with us. So, Mark, I'm looking forward to it. I know you all are as well. You can find the access code and login information. This is for partners only. Access code and login information was sent out via an email earlier this week, and it's also on the alerts page too. So go to the alerts page. You can find it and join us at 3 p.m.
Yeah, look forward to y'all joining us.
Yeah, absolutely. All right, Mark, why don't we go back to John? He was asking about his RMDs and what to do with that.
Yeah, hi, John. Welcome back. Sorry we had to go to that break, but that's what happens. Okay. Yeah, I was thinking if they allow you to transfer out, I know you said church or ministry or something, but do they allow you? Do you have biblical responsible investments available to you within your 403B?
Yes, it's Assembly of God financial, so it's a large denomination. They have their financial group as a missionary. We can put part of our salary in that, so they clear everything. So it's biblical responsible. That's in the 403B. But I wasn't so sure about Fidelity putting it all in there. How, the issue, how biblically responsible are they? So I just do a minimum amount to cover the tithe.
Yeah, well, that makes sense. The only thing I was really worried about is a lot of 403s have limited investments. I at one time I was familiar with Assemblies of God. I helped them set up in the Midwest here their retirement plan. So I know they were biblically responsible when I was involved with it. I didn't know if they stayed that way or not. When I stepped in, they weren't headed in that direction, but they quickly did. So that's good. I'm glad to hear that. Thank you. That's encouraging to me to hear. So your plan works. Now you're asking what to do with it while it's sitting there. What, you have it in a money market, or do you have it just in cash in the IRA?
Yes.
Yes.
Well, I know it makes a small amount of interest.
Okay.
So I'm not sure. It might be more like a little money market, but
yeah. Okay.
each month I get about $1,000.
That's all right. I just didn't want it sitting there earning 0.0000003% in the cash account or whatever. So if you're, but at $15,000, I don't know how much they're paying in interest on it, but hopefully it's 3-4%, and that's a good way to store it because you're going to give it throughout the year anyway. So I think you got it. I think you got it nailed down. You got a good plan. It's a system that works for you, right?
Yes, sir, so far.
Yeah. And so I'd say congratulations. Keep moving forward, honoring God, giving hilariously, and investing with biblical integrity, and just embracing the joy of knowing you're walking in the ways of the Lord.
Enjoy all your good spirits that you have. It's great.
God bless you,
Thanks,
sir.
Brother. God bless, John. Mark, why don't we go to Keith? Keith called in yesterday. I think he wants to bust your chops a little bit about your kidney stones.
No, I don't want to go to Keith.
But it'll make for such good radio, Mark.
All right.
Keith, so we're going.
I was hoping to catch you off guard here.
What's going on, Keith?
Yeah, somebody let the cat out of the bag.
Yeah.
Keith, I'll let you in on a little secret, brother. When our calls come in here, we can see the information of what the call's about. So Mark knew it before I even told him. It's like he's omnipotent. Omniscient, excuse me.
So what do you mean you're going to bust my chop about?
Oh, man, I tell you what. I can tell you, I'm not a doctor, but I can prescribe what happened to you.
Yeah.
When I got mine, my driver, I'm not going to say who that was because they're sitting kind of close by. My driver was taking me to the hospital, and I think she hit every cobblestone she could find. And when I got to the hospital, I told them I want as many drugs as you can give me.
There comes a time. Yeah, there comes a time. It is very, very painful. And this time it was surgery for him because it was so big. They couldn't just bust it up. And so they had to go in and cut it open and take out this inch. It was an inch big. Think about that.
Word.
Yeah, I knew 5-10 years ago that I had this in there, but it wasn't that big. And they said it wouldn't ever pass and it might block off my... Anyway, without going into depth, it was time to get it done. And the surgery was as painful as the stones were. So enough about that. I don't want to remember any more about it. I'm on the heel from
Glad you made it through.
Yeah.
What else is on your mind this morning, Keith?
Okay, I've been, this may be a simple question to you, but I was looking at my income, I'm an income investor, And, I look at dividends, and I think about stock, and so the income I get there is dividends, and still thinking about kidney stones. Dividends and capital gains, and then I thought, well, what else? There could be interest on bonds. I don't know if we have any bonds in our investments.
In your account, okay.
And ETFs, which I guess ETFs can have a group of things.
Right.
Could they be stock or bonds or both?
Well, it depends on the ETF. For example, the TPLC is a Timothy Plan Large Cap Stock Fund. Okay, the TPSC is a Timothy Plan Small Cap Stock Fund. TPFI or is it TPIF or TPFI?
TPFI.
TPFI is all bonds, corporate, government, and mortgage bonds. So it depends on which one you buy. You can have interest. I've heard a lot of, and had a lot of questions so far, Keith, on taking money out of accounts, and people say, well, my account's only producing 3.8% in interest. That's all I can take out. No. Is it also growing? You can use capital gains and interest. You can use principal. The whole idea is to calculate how this will work over time. I call it a total return strategy. What you do is you don't just worry about the income. You worry about income and growth, and you look at, it was $1,000 at the beginning of the year. It's $1,100 at the end of the year. Your portfolio that's reinvesting dividends and interest, and or accumulating them in the account with the original investment. So you have $100 there. So you have $100 that you could utilize at that point without touching principal. Don't just think interest. Remember, when we get into retirement, or when we're in a position where we need to start drawing down our investments, we have capital gains, we have interest, and we have principal we can pull on. If you calculate you're going to live to 100 years old, and you can calculate a drawdown on that based on an average you believe this portfolio total return can be, and then it hits 0 at 100, I think you have a good portfolio for retirement, because you're using the total return on that. And that should help you to keep up with inflation as well.
Okay, okay. Now you mentioned a drawdown, and that would be where the capital gains kick in.
Well, it could, and unless it's in an IRA or a Roth IRA. But even if it's in a taxable account, remember, your capital gains are probably going to be a third or nothing of what your taxes are for income taxes. Capital gains are at a discount, long-term capital gains.
Yeah,
and
long-term,
so if you're not pulling out $250,000 a year, your capital gains could be as a third of what they are, what your income tax is, or it could be zero, because there's so much that is not charged if you come under that. So and it is a benefit to have capital gains over short-term capital gains, long-term capital gains over short-term capital gains. So if you're a long-term investor, you hold it over 12 months, you hold it 13 months or more, you get long-term capital gains application to those drawdowns. So when you draw down, what you do is you go in, first out type of drawdown, meaning the first shares of the stock that you bought 20 years ago come out first, so that you get hit with the long-term capital gains, and the ones that you bought last month just stay in there till they've aged enough.
That's right. At least to that 1 year mark.
Yeah, right.
Yep.
Exactly.
Mark, that's a great advantage. That's a great advantage to long-term investing that we don't often talk about, is the long-term capital gains. Right. Mm-hmm. It's great.
Right. And I really want all our partners, all those who are strong stewards, to always remember that it's not all yours. God has given and entrusted to you to grow it, and just remember that he says, give unto Caesar's that which is Caesar's. So we have to be in our mindset realizing there is some of this that's going to go to him, but we're going to minimize it as much as possible in a legal way, because that's what God calls us to do, is stewardship wisely, minimize the losses and the transfers. Thank you so much for loving the Lord. Thank you for being with us today. Thank you for investing with biblical integrity. See you tomorrow.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.